Welcome to Trustnodes News. Today's latest follows.
BAT stays green in a sea of red. Basic Attention Token, BAT, has buckled today's red trend for most cryptos, with it gaining some 5% to reach 43 cents per token, up 4x from 10 cents in February 2019. The Ethereum-based ERC20 value measurer of Brave browser has been more bullish than other coins or tokens, rising 33% since April 15 with healthy volumes of about $122 million. The reason is probably because they have finally begun launching ads for those that opt in to view them. For those that have updated to the latest version, 63.x, they'll be allowed to choose on the settings page whether to see ads or otherwise. According to a representative from BAT, users will receive 15% of the revenue from ads, while publishers receive 70%. The rest presumably goes to the BAT project as income, meaning this is in effect replacing Google Ads with BAT ads on a Google Chrome browser that has been customized and rebranded to Brave. In addition, instead of publishers choosing where their ads are shown, to who, what geography, how many of them, and so on, BAT does. For this they get 15%, which in combination with the 15% that goes to users, makes it no different as far as publishers are concerned, save for the fact they lose some control over their own estate, as presumably they can't, for example, choose to not show any ads, or to show only one, or to not show any to Americans, etc. That might change, as there isn't much of a reason for BAT to not provide such customization for publishers. In addition, that 15% which goes to users could make its way back to advertisers if the user chooses to tip them. It's called a tip because it is voluntary. To incentivize such tipping, publishers could accept their BAT in return for subscriptions and so on. Users, however, can also just turn it into dollars and spend it. That's the attention part. You get rewarded for being targeted with ads, something which could have interesting Pavlovian implications. Brave says such targeting is based solely on your browsing interest. Nothing leaves your browser, they claim. How that works exactly isn't clear, but they say initially this 70% of ad gross revenue will go to users, Brave gets 30%. Publishers, who were meant to get better monetization to create quality content, presumably receive nothing until publisher-integrated ads launch later this year. Meaning this is the rollout, getting you hooked to form a user base, then presumably they do what they like, as switching costs can be high. From user reports, the ads shown so far are mainly crypto ads, by which they presumably mean no big brand. That's probably in part because switching costs are somewhat high there too. They probably have whole departments with data scientists and God knows what to fine-tune the whole process and to pay the least amount for the most gain. Brave is quite a small fish in that big picture, attracting less users than some mid-level sites have page views a month. Meaning their attempt to compete with Google might be more of a slow grind, if it makes any headway at all. That's in part because now this project is effectively complete, there isn't much innovation. Their browser is basically Chrome, with nothing new to it save for an internal ad blocker rather than having to add a plugin. The token is new in a way, but it almost plays no role. Another BAT representative says advertisers can pay in fiat and basically everything will happen in fiat, but they will turn this into BAT in the background. That's another trust me, but even beyond that, it sounds inefficient, as conversion usually has fees, spreads, and so on. Meaning they'll probably convert only what they pay to users and publishers in BAT, while they'll probably keep their own 15% in fiat. Naturally, some of that 15% should go towards buying BAT or burning it as a dividend, but whether they will do so and just how much of it, remains to be seen. That's because there are considerable expenses from the Brave team's perspective. They'd need a marketing team, they'd need analysts, and on. All of which costs money. Finally, and most importantly, it isn't clear whether there will be any transparency. They say 15% or 70%, but who is to know? They could, and why on earth would they not, keep 50% or maybe even 70% of the revenue, and unless some whistleblower, who would be out of a job, no one would really know. That's a big problem that goes far beyond BAT. Affiliate marketing is a big industry, for example, but publishers rely on what they're told was a conversion. There's hardly a way of knowing, with the only safety net being a more high-level incentives game that boils down to you remove the affiliate ad and see whether they care to chase you and bag you to come back. BAT could and can address that significant problem that does require some innovation, but is now possible because of smart contracts that can show token transactions, and thus how much is bought/spent for what if the system is so designed, and so on. Then there could be a chain effect where publishers demand such advertising platform because they'd know they're not being cheated, and thus advertisers would have no option but to follow them. Google here wouldn't be able to play unless it copies the platform, but first mover effects and so on, making it all actual competition. While in the current BAT setup there's little on offer for advertisers, users or publishers, that goes beyond what is already available. Users of course may receive some pennies, and maybe they will spend time to allocate such pennies to publishers they like, but blockchains are about trust, and here a lot of trust could have been removed. Pretty much none of this, trust me, has been minimized so far, but this is a very new project. A project that can have potential, but how it will develop remains to be seen. Copyrights Trustnodes.com. DeFi loans top $35 million a month. Some $35 million has been lent out by Ethereum dApps in the past 30 days from just 3 dApps according to LoanScan. MakerDAO's DAI dominates with about $25 million, but a newcomer, Dama, has already processed about $5.5 million worth of crypto loans. DAI remains the most popular asset on Dama, where you can borrow it for 10%, less than MakerDAO's 14.5%. To borrow ETH on Dama is a lot cheaper, but only about $350,000 worth of wrapped ETH has been lent out for this month. While those who want to receive interest by lending ETH get 2.50%. For DAI, it's at a considerable 11%. Compound is seeing more interest beyond ETH and DAI, but the latter does dominate with some $2.9 million lent this month. The interest rates here for borrowing both DAI and ETH seems to be higher than on Dama, presumably because the latter opened publicly only this month, thus it might have not attracted as much liquidity. That could potentially allow for loan arbitraging. That's something new in this specific manner, because while you can manually borrow cheaply to lend more expensively, here a bot could automatically do it. Finally, according to the data by LoanScan, the only other asset that is seeing demand for borrowing is BAT on Compound. The amounts are small, however. Only $123,000 worth of BAT has been lent in the past 30 days at a borrowing interest rate of 6.48%, making it a grand total of circa $35 million lent by the people through smart contracts with somewhat complex collateralization algorithms that makes these secured loans. Compound stats on Curious Giraffe. As can be seen above, there has been considerable growth in decentralized finance, with DeFi rising as one of the main use case for dApps for now. Instead of just holding ETH, risk takers, new bankers, and whoever else, play on these dApps and probably have bots running on them, with maths now being far less boring, as for clever ones it could potentially make them quite a bit of money if they can find and exploit inefficiencies. Copyrights Trustnodes.com. 2 million ETH traded on decentralized exchanges in Q1 2019. An incredible $330 million worth of ETH has been traded in a somewhat peer-to-peer manner through smart contract-based decentralized exchanges, DEX, according to data by a blockchain analytics startup Alitio. 7 of them dominate at this stage. The DEX remains the most popular, with the latest easily available data showing close to 23,000 ETH was exchanged on March 28, while 1.1 million was exchanged on the first quarter of 2019. That gives them a market share of 56%, with competition still hot in this growing space. Kyber comes second. They handled about 270,000 in the first quarter, circa 3,000 a day, giving them a market share of 14%. Uniswap and Bancor are almost tied, with Uniswap just a bit ahead, both handling circa 200,000. One of the oldest, EtherDelta, comes fifth with 100,000. ETHFinex and Radar Relay then follow with about 50,000 each, making it a total of circa 2 million ETH in 3 months. Ethereum DEX market share, April 2019. These DEXs usually look similar to a centralized exchange with graphs, bids, sometimes market orders, sometimes stop losses, but the difference is the ETH doesn't leave your possession until after the order is executed. You basically connect through MetaMask or Ledger or wherever else you hold your ETH, with the DEX then acting more of as a messaging service. You tell it however much you want to sell or buy, and then the actual transfer happens on the blockchain for the traded amount. With a centralized exchange, in contrast, you have to hand over your ETH to Changpeng Zhao of Binance or whoever else. Zhao is unlikely to run away with it and he hasn't been hacked so far, but Mark Karpeles of Mt. Gox might be a different story. That means DEXs can be more secure provided they don't have some bug somewhere, but that in turn means you have to be a lot more responsible for your own security. As much of this is happening on-chain, there are transaction fees. So faking volumes, wash trading, and so on, would be quite expensive and a bit slower than in a centralized exchange because transactions have to confirm. Millions being traded on decentralized exchanges, April 2019. For some of these exchanges, like EtherDelta, you don't even need to talk to anyone to create a new market. You just click a button that creates a new smart contract with the token then tradable against ETH. That's what we did in our test run of a decentralized initial exchange offering, IEO. The process was very smooth, but the user interface, UI, leaves much to be desired. While some other exchanges, like a DEX, have a better interface but you need the permission of someone to list your token. Most of these are still very new with plenty that can be improved, including the addition of state channels, second layers and so on, to make traders quicker and easier. Some however are very convenient and in many ways more convenient than centralized exchanges, but that's usually if they're a decentralized broker, which can come with a price premium, rather than an actual exchange with bids and limit orders. For the latter, bots are now scalping any inefficiency and in the process adding some liquidity, making this space a more interesting aspect of smart contracts because decentralized exchanges have been dreamed for years. They're now here and appear to be flourishing with about $100 million exchanging hands every month this year without counterparty risk in most cases. Copyrights Trustnodes.com. Billionaire who lost $70 billion in the dot-com crash bought Bitcoin, lost there too. Masayoshi Son, Japan's richest man with an estimated net worth of $22 billion, lost an incredible $70 billion during the dot-com crash of 2000, making him the man who lost the most money in history. Plenty was still left, including his stake in Yahoo Japan, Alibaba and others. He went on to keep investing, including in Uber, Nvidia, Flipkart, WeWork, OneWeb and more, as well as Bitcoin. Apparently he bought at the high in late 2017 after being introduced by a Bitcoin evangelist, Peter Bridger Jr., co-chairman of the private equity firm Fortress Investment Group. He then quickly sold in early 2018 as the market turned, losing $130 million according to the Wall Street Journal. Presumably he learned the dot-com lesson, so he didn't hold to lose maybe $1.3 billion or more, with it unclear just how much he invested initially. Who leaked all this is also unclear, with Wall Street Journal citing people familiar with the matter. Nor is it clear why it was leaked now, but Son is known for taking risky bets which has made him one of the most influential person on earth. He is the founder of the world's largest venture capital firm, SoftBank, with its assets estimated at $190 billion. SoftBank's $100 billion Vision Fund invests in emerging technologies like artificial intelligence, robotics and the Internet of Things and also focuses on companies that aim to revolutionize real estate, transportation, and retail. Meaning the billionaire probably has a very good understanding of the Internet space and its potentials. So if he will now get back to buying crypto directly, is unclear. Copyrights Trustnodes.com. International bank issues tokenized corporate bonds on Ethereum's public blockchain. Société Générale, one of the biggest banks in Europe and the world, has announced they have issued collateralized corporate debt offerings on Ethereum's public blockchain. The bank said on the 18th of April 2019 a subsidiary issued €100 million of covered bonds, obligations de financement au habitat or OFH, as a security token, directly registered on the Ethereum blockchain. OFH tokens have been rated AAA by Moody's and Fitch and have been fully subscribed by Société Générale, they say. We found 2 smart contracts that might be relevant. One of them is by BIC, a French company that does pens, lighters and other disposable items with yearly revenue of circa €2 billion. Société BIC corporate bond on Ethereum? The contract code is not easily viewable, but it looks like they've created a token, given it a name, and that's pretty much it. In return for this token, presumably fiat is sent to the bank, with the token now entitling you to receive back whatever loaned fiat amount corresponds to 1 BIC. It is probable that this is all in addition to more traditional methods of signed contracts or database accounts and so on, but there is little reason why this token itself can't be the beginning and the end of the debt ownership. The main difficulty for now would be securing the token, but people secure their Bitcoin, ETH, so the more conceptual difficulty is how you pay back the debt. The solution there can be quite simple. You just give the token back to the bank or the corporation and redeem it. The benefit of all this would be liquidity because the bond can be sent anywhere in seconds and thus can be exchanged 24/7. The other benefit would be access to a far wider market. Millennials, for example, probably have no clue how to buy a corporate bond with all sorts of archaic processes and minimum purchasing amounts and so on. They all, however, know how to log into Coinbase or Binance or wherever and pretty much instantly buy or sell whatever they want. The other smart contract has Société Générale's own name, but anyone can enter any name for a token, although why would they choose Société Générale? The other aspect here is that the dates are a bit off. Close to 14 days ago would have been April 10th rather than April 18th. The ticker here seems to be Société Générale SA, the subsidiary that issued the bond. That means for this smart contract, and assuming it is indeed by Société Générale, they've issued a collateralized debt bond to raise money for themselves. The same as above applies here too, but there's another very interesting aspect because we can suggest the BIC bond above could have been issued by BIC itself without having to go through the bank. Now there are probably all sorts of regulatory aspects etc., but from a technical perspective and from a conceptual perspective, while a paper bond does need a bank to keep accounts, a blockchain bond doesn't need a bank because the Ethereum network keeps accounts. So in this brave new world, Société Générale would be reduced to being more of a consultant rather than a bank, although there could be many financial services, including custody of these tokens and perhaps redemption. Copyrights Trustnodes.com.
That's it for today. See you tomorrow.